we've covered the basic introduction to Income Tax Act. We've also covered several definitions like what is an assessment year, what is a previous year, what is an assessee, what is income, etc. Okay. Do you have any questions on those?
No, sir. No
Okay.
question.
All right. So we will start with the first head of income, that is income from salary. Remember, I told you that under Income Tax Act, any income is taxed under one of the 5 heads. Okay, so it is income from house property, income from salary, income from house property, profit and gains from business and profession, and the fourth one is capital
Interest income.
gains.
Interest income.
Capital gains, and the last one is income from other sources. So interest, dividend, all these kind of things fall under income from other sources.
Yes.
Right. So today we are going to start the first head out of these 5, that is income from salaries. Right. So we are starting a new head, that is income from salary. Right. You know what is the basic meaning of salary, right?
Yes, sir. In the last class you have taught.
So what is it?
Amount received by individual.
Say that again, sorry.
Amount received by individual.
But for what?
Salary.
But for what?
Or what means, sir?
You can receive an amount for various reasons. When do you call amount received by an individual salary? You can sell something and receive money also, right?
Yes, sir.
You can perform somewhere for someone and receive a salary, or you can get interest and receive money. So when do you call that receipt a salary?
Yes, sir.
Amount received by an individual, when is it called salary?
Yes, sir. Yes, it is a salary. Yes, sir.
No, I'm asking you a question. What is salary?
Salary amount. So that's what I've said. The amount received by individual. That is what salary is.
Okay, amount received by an individual. Fine. Suppose I have a shop where I sell pens. I sell this pen, okay? I receive an amount. Is that salary?
No, sir.
Why not?
No, sir.
Then what is salary?
The salary generally, sir, salary. So how can I explain on it? Sir, I'll explain in simple words, sir.
Absolutely simple words. Yes, please.
Okay. So, sir, salary means it's a payments are paid on a monthly basis, sir. It is a regular payment on a monthly or yearly basis, sir.
So you're saying it's an amount received.
A fixed amount of money paid regularly for the work done, sir.
And it's a regular payment.
Yeah.
Okay.
Yes, after doing.
Okay, listen. I am a chartered accountant. I am a CA. Okay.
Yes, sir. Yes.
My client has asked me to do some work for him on a regular basis.
Yes.
Okay, every month I go to their office, spend some time looking at their files and giving them some advice. And for that, they give me a fixed monthly payment on a regular basis. So I am receiving amount from them. I'm receiving money from them. I'm receiving it for work done, and I'm receiving it on a regular basis, monthly basis.
Yes,
can I call this salary?
Yes, sir.
Are you sure?
Yes, sir. That's what salary is.
No, this is not salary. This is professional fees. If you go to a doctor for a checkup, not you, I don't wish to say this for you. Suppose some person, Mr. X, has some kind of an ailment for which X has to go to doctor every month, visit the doctor every month, and the doctor's fees is 1000 rupees. Okay, so every month he goes there to consult the doctor, gives the money on a regular monthly basis. Or
Yes, sir.
suppose the doctor comes to his house once in a week, and for that every month he pays 5000 to the doctor. So can you say that the doctor is receiving salary from Mr. X?
No, no, sir. Salary so you receive by an employee, sir. Salary,
Exactly, so
salary you
that's the
salary salary you get when there's employee relationship, sir. Not a
correct.
customer, not any customer, sir. Because like Mr. X, what you said is not a employee, he's a customer. He's just
Correct.
going to a doctor, sir.
So for an income to be called salary income, the most important condition is not that it is a regular payment or it's a monthly or a yearly payment. The most important condition is the payer
Payer is the
must be
employer.
an employer
Payer is
and
the employer. Pays the employee. Yes, sir. I got it.
employee, and there is a contract of employment between them, which means that the employee will provide time, effort, skills, services, and the employer will give remuneration to the employee in some form, maybe cash, maybe other than cash, maybe a bit of cash and bit of other facilities. So in together, it's called remuneration. The employer will provide remuneration to the employee. The most important criteria is not regular payment. It is this, that there should be an employer-employee relationship. There should be an employment contract. All right.
Yes, sir.
So let's salary means and includes remuneration. Now notice it says in any form due for personal services. So if you have given your if you're given your house, if you own a separate house, an additional house which you give on rent, you earn rent from that, that cannot be called salary because it is not for personal services, it's for letting out a property. Salary means due for personal services as
Yes,
per
sir.
contract of employment or service.
Yes, sir.
That is the meaning of salary. This necessarily means that remuneration will be treated as salary which is received out of relationship of employer and
Employee.
employee. If the payer is employer and payee is employee, then whatever the remuneration in any form paid by the employer to employee will be treated as salary income. Okay,
Yes,
and
sir.
every payment made by employer to his employee for services rendered would be chargeable to tax as income from salaries, right?
Yes,
So
sir.
I told you that income tax is a law. In law, they have very clearly defined things, and whatever is the definition, according to that, we apply the tax laws. So income from salary is any and every payment made by employer to the employee for services rendered.
Yes, sir.
Further, it says that for the purpose of Income Tax Act, it will include both monetary payments. That means not only amount received by the employee, but for example, the employer is also given a car, not gifted the car. The car belongs to the employer, but the employee is using it. It happens very often, right? You'll see
Yes,
that
sir.
the employee is having a company car or the employee is staying in a company home. The home is not owned by the person. The company is owning the home or paying the rent. So these are all additional facilities that don't come to you in the form of cash. Cash you
Yes,
receive, fine, but these additional payments, these are also counted, not payments, these additional facilities, which are non-monetary, not in the form of cash, they are also counted as salary. So there could be accommodation, medical facility. Sometimes employers give interest-free loan. That also is a benefit, right?
like sir, commission, pension, all these additional salary.
Yes, pension is also that, but pension is given to you in the form of cash. I'm talking of non-monetary benefits, not in the form of cash.
Okay. Okay. Okay.
Okay.
Okay. Yes, sir. One salary. And yes.
So all of this forms part of salary. Move ahead. What are, from this discussion, we can say what are the features of salary? First of all, it's a remuneration for personal services. It is not rent for a home, or it is not interest on a loan or something. It is remuneration for services, personal services rendered. Second, employment contract and employer-employee relationship is a must. If this is not there, it is not a salary income. Third, remuneration. If these conditions exist, then remuneration paid for the services in any form, the most important part here is in any form, will be treated as salary. Okay, so it may include monetary payments, that means payment in the form of cash, as well as non-monetary facilities, for example house, car, or use of company's assets, or maybe medical facilities, interest-free loan, and so many others. Clear? Now, when you study income tax, I said that tax can be levied on income under one of the 5 heads. So income has to be categorized under one of the 5 heads. And for each of the heads, there is a charging section. What is the meaning of this charging section? You remember I told you that income tax is divided into small parts. Each one of them is called a section, and each section has a number. So you can refer to them easily. This much you remember?
Yes, sir. I remember.
So what is section 1 of the Income Tax Act?
Section 1, you can write in title, scope, and effect.
Correct.
Title,
Correct.
scope, and effect, sir.
Correct.
Like
What is section 2 of the Income Tax Act? What does it contain?
definitions, all the definitions, sir.
Yes, it contains most of the important definitions. Similarly, for each of these for each of these 5 heads of income, there is a section that tells you that how tax is to be charged on these income. That is why it is called charging section. So for salary, it is section 15. Let's see what that section says. So it's basis of charge under section 15. Remember, I told you whenever we are studying a law, you see this U/S. It's a short form for under section. So basis of charge under section 15.
Okay.
Okay, according to section 15, the following income shall be chargeable to tax under the head salaries.
Okay.
So first point, any salary due from an employer or former employer to an assessee
So is it
in the
section
previous year.
So is it section 15 or the section 2, subsection 15?
No, this is section 15.
Because I found the definition, because that is also definition of a charge. No, that's why. So
No, it is not defining anything. It is not a definition. It is
okay.
telling you when the salary will be chargeable to tax, when tax will be charged on a salary income. That is what it is telling you. It is not defining any term. Where is the definition? There is no definition.
Yes.
Okay. This is section 15.
Okay.
So what do you understand from this? Any salary due from an employer or former employer to an assessee. Who's an assessee?
Those are paying the assessment here, sir. For paying
Those people who have some tax or interest or penalty to pay to income tax. Okay, so any person for whom the assessment is made is called an assessee.
Those have to pay the income tax, right? Assessee.
Yes.
Okay.
Yes. So coming back, any salary due from an employer or former employer to an assessee in the previous year, whether paid or not, what do you understand from this? Tell me.
Sir, assessee can be an employee too, sir. So any salary which you paid, which is paid by an employer to employee in the previous year, sir, they have paid it or not. That is what that is.
Suppose I work for 2 months in the previous year. I work for 2 months for a company, but they have not paid the salary yet. Am I supposed to pay income tax on that?
Yes, sir.
Why?
Any companies, sir, which have not paid, sir, can you repeat, sir?
Suppose I work for 2 months for a company, but they have not paid my salary yet. I haven't received the salary. I have earned it, but I have not received it. They will pay in some time. There's some problem in the company, they will pay in some time. Am
So
I
you can't.
supposed to pay tax on that?
No, sir, you can't pay. You have just earned it, but not received only, so you can't pay.
No, that's not right. That is why I'm saying you have to read the law very carefully. It clearly says any salary due. Due means it has become receivable. I have to receive it. I have already earned it. It is due date for the company to pay me. Even if they have not paid it, whether paid or not, does not matter. Any salary due in the previous year, even if it is not paid, it will be chargeable to income from salaries.
Yes, sir.
Is this clear?
Yeah, I got it, sir. You receive the salary, but it doesn't matter whether you pay it or not.
I have not received the salary. I have earned the salary. I have worked for 2 months, but for some reason the company has not paid me still. Even then, that income is considered an income of that previous year. And on that, it is chargeable to tax under the head income from salaries.
Yes, sir.
That is what I'm telling you. Payment is not the important criteria over here. Okay.
Yes.
Second point, notice it says former employer. That means what? That means suppose for the first 8 months, I was working for one company. Then I left that company and I joined another company. So now
Form.
if I look at the
Yes.
situation, when I'm doing the assessment of tax in the assessment year, at that time, I do not have an employer-employee relationship with the first company because I already left that company a few months ago. Even then, that income, when it was earned, at that time, there was employer-employee relationship. So that will also be chargeable to income under the head income from salaries.
Yes, sir.
Okay. So even if you left the job, still in that year, you had, when you earned the income, you had that relationship. So it will be considered as salary income. Next point. Any salary paid or allowed to him in the previous year by or on behalf of an employer or former employer, though not due or before it became due, will also be charged to tax in that previous year. What is the meaning of this? This means, suppose I have not even earned the salary, but I got it in advance. Before it became due, the employer has already paid me. Even in that case, that income will be chargeable to, tell
Income
me,
will, income will be chargeable to SSC.
huh?
SSC, right?
SST,
No, SSC.
assessee, yes. So will
SSC,
that
sir.
be salary income or not?
Yes, sir, it will be.
It will be. Okay. Any arrear of salary paid or allowed in the previous year by or on behalf of the employer or former employer, if not charged to income tax in any earlier previous year. This point, I'll come back to that. But first two you have understood, right?
Right, sir.
Okay. So let's do an example. So we are looking at the first point, any salary due from an employer or former employer to an assessee in the previous year, whether paid or not. So the question is, Mr. A worked as an employee for XYZ Limited for 3 months during financial year 2021 and 22. The monthly salary was 80,000, but the employer has not paid the salary till date. What's the date today? The date is 18th July 2022. So Mr. A worked for XYZ Limited as an employee for 3 months. So
Yes,
January, February, March, he worked for XYZ Limited, but the company has not paid any salary till now. So now the question is, for AY assessment year 2022-23, what will be the salary income of Mr. A for income tax purposes?
Okay. How much amount you said?
80,000 per month.
Uh, 80,000 per month.
Yes.
So, sir, they could not pay the previous financial year, right?
In 2021-22,
Yes, sir.
the person worked for 3 months. Till now, they have not paid anything. So
Yes.
for assessment year 22-23, what will be the salary income of Mr. A?
Uh,
While calculating the income tax in assessment year 22-23, how much will Mr. A say his salary income is?
2,40,000, sir.
Why?
We work for 3 months, no, and salary is 80,000 per month.
But it is not paid yet.
So what is so sir, what it could be, sir? Then
No, I'm asking you, it is not paid yet.
that is not paid here.
So tell me.
So I don't know, sir, actually.
You know it. Whether paid or not does not matter. If it is
Yeah.
paid, fine. If it is not paid, no problem. Still, it is considered as an income. So your answer is right.
Yes, sir.
Financial year 2021-22. This is 1st April 21 to 31st March 22. This will be considered as the previous year. Correct?
Yes, sir.
Financial year 2022 to 23, this will be considered as the assessment year. In the
Yes.
assessment year, we charge to tax or we do an assessment for income earned in the previous year. So in the previous year, Mr. A earned a salary of 80,000 into 3. It was earned but not paid. Now, Income Tax Act tells you whether paid or not does not matter. You have to charge it to tax. You have to impose tax on that income. So the fact that it is not paid will not make any difference on the answer. The answer will be, in this assessment year, the total salary income will be 2,40,000. Okay, is this example clear?
Yes, sir.
Okay, no
Clear.
questions, right?
No, sir.
Okay, let's move on then. Let's look at another example. Same point. Mr. A worked as an employee at XYZ Limited for 3 months during FY 21-22. Monthly salary was 80,000, but the employer has not paid the salary till date. Before that, he worked for ABC Limited, any other company, for 9 months. So 1st April 2021, from then till 31st December 2021, he was working for ABC Limited, where his salary was 60,000 rupees and it was paid on a monthly basis. And for
Okay.
January, February, March, he changed company. He left that company, started working for another company, XYZ Limited, where his salary was 80,000 rupees per month. But XYZ Limited has not paid him till now. So for assessment year 22-23, what will be the salary income of Mr. A?
So salary income. So it won't make a difference whether you pay or not pay.
Correct. So tell me, what is the answer?
50,000 on a monthly basis, right? So on 3 months, so 1,80,000.
How 1,80,000?
Another company has joined from January, February, March.
First company, how much was the income?
First company was the first company he worked up to 31st December, right?
Yes, for
So
9 months.
so April to December, yeah. So 60,000 to 9, so 5,05,000.
Okay, 60K into 9.
Yeah, so 5,05,000.
And this is paid. And XYZ Limited, 80,000 into 3. This is not paid. Even
Yes.
though it is not paid, doesn't matter. For income tax purpose, both these amounts, this as well as this, will be considered as salary income.
Yes.
Right?
Yes, sir. Are these both examples from the same point? The first one.
Yes, the first point only. So
Okay, okay.
5,40,000 plus 2,40,000. This will be the total income under the head salary.
Yeah.
Clear?
Yes, sir.
Okay. Now let's move on to the second point. Any salary paid or allowed to him in the previous year by or on behalf of the employer or former employer, though not due or before it became due. That means it is saying that the salary is paid, but it is not yet due before it became due. That means it is paid, it's like paid in advance, paid before the work was done. Even that is chargeable to tax in the year when it is paid. In the first case, we ignored the payment. In this case, we are not going to ignore the payment.
Uh, Sir, I'm a bit confused at this point, sir. Second point, I'm a bit confused.
So, suppose I started working for a company in March. Okay.
Yes, sir.
So, let's look at this example. It will be clear with this
Yes,
example.
sir. Yes.
Mr. A worked as an employee of XYZ Limited for 3 months during FY 21-22, financial year 2021-22. Okay, so this is also the previous year.
Okay.
Let me just write down the next financial year over here, because this will be the assessment year for income earned in this financial year, right? The monthly salary was 80,000. So how much time did I work? 3 months
3
into
months.
80,000. The employer paid 3 months salary. So the employer paid on time. The entire 3 month salary was received on time. So this entire 3 month salary will definitely be chargeable to tax under the head income from salaries in this assessment year. Now
Okay.
notice what it says, and also paid 2 months advance salary on 31st March 2022. So in addition to paying these 2,40,000, another 1,60,000, 2 months salary was paid in advance. This salary belongs to which period? Does it belong to this financial year? No, it belongs to
Was
the next financial year.
assessment year.
On 31st of March, it was paid in advance. So this income will actually, the payment has been received, but the income will be earned in the next financial year. That is
Next
1st
year.
April 2022. From that period till 31st May 2022, because it is salary for April and May that has already been paid end of March in advance.
So this will be added.
But for income tax purpose, we will consider this 1,60,000 also as an income for this financial year only, for income tax purpose. It's not the reality, but for income tax purpose, we will charge it to tax according to, we'll consider it to for taxation in this financial year only. So when we are doing calculation in the assessment year, we will add the 1,60,000 because it has been paid. Again, see, read the point. Any salary paid before it became due, even that will be charged to tax in the same year when it is paid.
Okay.
Okay. So if the salary is not paid on
Also
time,
not due also, or after due also. That also can be considered as chargeable to tax.
see, if the salary is earned and not paid, then also it is considered for tax. If the salary is paid before it is earned, then also it is considered for tax.
Before due, right?
Before it is earned, before it becomes due, if it is received, even then you have to pay tax on it.
But sir, here it is given though not due also. Though not due.
Though not due means you have not yet earned it. On 31st March 2022, the company is giving you advance salary. Advance means you've not yet done that work.
Yes,
Before the work is done, before the salary is due, I'm giving it to you, then only it's an advance.
Okay. Yeah, I got it.
Clear? So for income tax purpose, if it is earned but not paid, no problem, charge tax on that. If it is paid before it is earned, even then you charge tax on that.
Okay. Now I got it. Yes.
Clear? Both the points
Yes.
are clear? Great.
Yes, sir.
Now there was a third point also that we had skipped at that time. And the third point was any arrear of salary paid or allowed in the previous year by or on behalf of employee or employer or former employer, if not charged to income tax in any previous year. What is
Sir,
the meaning of arrear salary?
sir, I'm not sure, sir, but I can say that paid after the due date, sir.
Not
Outstanding.
exactly paid after. Yes, it is paid after the due date, but arrear salary has a special meaning. Sometimes what happens is you don't know what your salary will be because some component of your salary is variable.
Sir, I got a call, sir. Just give me a minute, sir. I'll just come.
Yes, sure.
Yes, sir. Continue.
Okay, so let's look at the third point. Any arrear salary paid or allowed in the previous year, if it was not charged to income tax in any previous year, any earlier previous year.
Yes.
What is the meaning of arrear salary over here? Let's understand with an example.
Earlier I said outstanding or paid after the due date also.
Yeah, but sometimes you don't know how much salary to pay. For example, there's a component in your salary which is variable. It depends on the company's profit, and the company's profit was calculated later. So much later, it could not be paid earlier because it was not calculated only, it was not known only. So afterwards, the company calculated and decided your bonus will be so much and paid it to you the next year. That is one example. Second example is sometimes you revise the salary. You change the salary. Suppose you're increasing the salary, but you're doing it with retrospective effect. So not only for future years, but also for the last 2 years. So last 2 years, your salary was calculated and paid to you. But at that time, this was not known. Now they have taken a decision to increase the salary with retrospective effect. That means also for the last 2 years. So additional salary for the last 2 years you will receive now. That is called arrear salary. Let me give you an example. Suppose Mr. A worked for XYZ Limited from 2019 onwards. Okay, his salary on 1st April 2020 was 50,000 per month. All right. Now
Okay.
the company has a policy that whatever your performance has been, on that basis, in the month of April, there will be an appraisal. They will look at your performance and give you a hike. That means increase your salary. How much increase depends on how you perform. And this happens every year for every employee. Now, in April 2020, there was lockdown. Suddenly COVID happened. So due to COVID, the appraisal did not happen in financial year 2021. So this year, April, the appraisal that was supposed to happen, the appraisal did not happen. The employee continued to get the same salary, 50K per month for the whole year.
Yes.
Is this clear? Now
Yes, sir.
come to 1st April 21, after 1 year. Okay. Now the
You
appraisal
mean
happened.
you mean 31st March, right? Not 1st April.
No, I'm talking of the next year.
Okay, next.
Financial year 2021 has gone. Appraisal did not happen. Now in the financial year 21-22, appraisal happened and he got the salary. So during the year appraisal happened, his salary, he was still getting 50K per month. Okay. And he got the arrear salary on 30th of March. That is 60,000 rupees he got. That means from 1st April 20 to 31st March 21. For this period, he was getting a salary of only 50,000 per month. But had the appraisal happened on time, he would have got additional 60,000 for the whole year. That means per month, his salary should have been 55,000. But
Yes.
that time the appraisal did not happen because of COVID. It was postponed. So now on 30th March 2022, he's getting additional 60,000. But this 60,000 is not a salary for this financial year. It is a salary for this financial year. It is called salary received in arrears, or arrear salary basically.
Salary received in advance. Yes.
Not in advance. This is arrear salary. This belongs to this financial year. This 60,000 belongs to this financial year.
Okay.
Is it clear?
Yes, sir.
Okay.
Like, so basically, in the previous year, if it is not charged to tax, that also will be considered as tax, right?
So in this case, even though it belongs to the previous financial year, we did not know it at that time. It is
Yes, sir.
we have only come to know about this right now. So we will treat this as an income of this financial year, 1/4/21 to 31/3/22. Even though it actually belongs to this year, we will because it was not charged to tax in this year, we will consider it as arrear salary chargeable to tax in this financial year.
Okay. Now I got it. Sir. Yes,
Now
sir.
you got it. Now it's
Yes.
clear. So when you calculate the income
So
for,
we considering an extra financial year to previous year because previous year there was no appraisal only due to pandemic.
exactly, so
I
this
got it, sir. Yeah,
salary, you came to know about this only in the current financial year.
you
So
got it, sir.
therefore you received it in the current financial year. So therefore it will be charged to income tax in this year, even though it belongs to some other year. For income tax purpose, we will consider it as an income for this year.
Yes, sir. Got it.
Clear?
Yeah.
Let's move on then. So you can do the calculations, how much it adds up to.
Yeah.
Okay. So once again, amount received by an individual can be treated as salary only if the relationship between payer and the payee is that of an employer and employee. If a master servant relationship does not exist, the amount received cannot be considered as salary. The employer, not the employee, the employer maybe an individual, maybe a firm or a company or anything, doesn't matter. The employee may be a part-time employee or a full-time employee. Nowhere it says that it has to be a full-time employee. Even part-time employee will be considered the same.
Yeah.
There is no difference between salary and wages for the purpose of income tax. When you're studying income tax, whether you receive it as salary or wages, it will be treated as salary for income tax.
Yeah.
An individual may receive salary during the previous year from more than one employer, no problem. Because at the time of assessment, you may not have an employer-employee relationship, but when you earned it, at that time there was an employer-employee relationship. Okay, so you joined one company, then during the year you left that company and joined another company, no problem. You can receive salary from 2 employers or more employers also.
Yeah.
Fine.
Yes, sir.
Next, salary may be received from former employer also, even though he is no longer your employer, but maybe your settlement was not done, it happened after a few months. So even that will be considered as salary. Or obviously present employer, or even prospective employer. What is the meaning of prospective employer? Someone who has hired you, but your employment has not started. Suppose someone who has hired you to join the company from 1st of August. Today is 18th of July. So right now, you don't have that employer-employee relationship. It will start from 1st of August. Your contract will start from 1st of
But
August.
sir, but how can you receive salary if there is no employee-employee relationship? How
Suppose
can the
that
salary
person
be?
pays anything to you. Suppose that person pays anything to you. He is not an employer, correct, but he's a prospective employer. So even this income will be treated as salary income.
Even if you
Okay.
have no, even if you have no relation with prospective employer, then that also be
No, you
considered as
have a
salary.
relation. You have a relation. He's a prospective employer. You're going
Yeah,
to
but
join the company.
yeah, the company have no, you have not joined, but you have relationship with them with the next employer.
It is a prospective employer, no?
Yes, yes, yeah, I got it. I got it. Sorry.
Okay. Salary is taxable on due basis even if it is not received. So if you have earned it but not received it, still it is taxable. And similarly, salary is taxable on payment basis when it is paid before it is due. That means advance salary.
Yes, sir.
Okay. Next, the act, that means the Income Tax Act, does not make any distinction between gratuitous payment and contractual payment. What is the meaning of this? Suppose I have an employment contract where I get X amount of money as salary. In one particular year, the owner, the company was very happy and they gave me extra amount Y, like charity. Okay, they distributed to all the employees.
Okay.
So it does not matter whether it is there in my contract or not. If I'm receiving any payment from my employer because of the employment contract, even if it is not a contractual payment, even then it will be treated as salary.
Yes.
Clear?
Yes.
Next point. If salary is paid tax free, the tax paid by employer is also included in salary for taxation purpose. Let me explain this to you with a simple example. Suppose my salary is 100 rupees. Okay. So tax on that should be 20 rupees. Let's say 20%. I'm oversimplifying it, but just for the sake of understanding. Suppose the employer pays me 100 and tells me that, listen, you don't have to pay tax. I have already paid your 20 rupees tax. Okay.
Yes.
So this payment, 20 rupees tax, was whose liability? Who was supposed to make the payment?
Employee.
I was supposed to make that payment.
Yes, sir.
Now someone else is paying my expense. What does it mean? They are giving me a benefit.
Yes, sir. Yes, sir. They're
So
giving a
that also
benefit.
has to be included in the salary,
Yes, sir.
right? So if my company pays the tax on my behalf, that is as good as paying money to me, that also will be included in salary. So that will be added to my salary, and on that, now tax will be calculated not on 100 but 120 rupees. According to Income Tax Act, my tax will be not on 100 rupees but on 120 rupees, because that 20 rupees also it will consider as salary.
Yes, yes, sir. I think you have explained this earlier also.
Okay.
You have explained earlier also.
Yes. Fine.
That yes, sir.
Let's move on. A few special points for some special situations. For example, if a partner of a firm, you know what's a firm, partnership firm?
Firm means an individual, no, partnership between two individuals. Sir.
Yeah, between
Firm.
two or more individuals, if they form a partnership, and if the partner receives any salary or bonus or commission or remuneration in any form, then it will not be charged to tax under the head income from salary. Even if the partner is receiving salary, that
But
will
sir,
not be considered salary for the purpose of Income Tax Act.
salary includes commission, all these, no? Salary also,
Correct.
yeah.
So whether you call it bonus, commission, remuneration, whatever, or even plain salary, if it is salary paid to the partner of the firm by the firm, it will not be considered salary income. Tell me why.
Let me think, sir. One second. Because it is advanced salary, all these.
No.
No,
Who told you it is advanced? Did I tell you it is advanced or arrear?
no, no, sir. Earlier. No, sir. No, sir.
It is neither advanced nor arrear. It is paid on time. If the partner of the firm receives any salary from the firm, it is not considered salary for income tax purposes. Tell me why. Think why it is not salary. What is the most important condition for salary?
Sir, for personal use, sir. Most important condition is
Personal use.
no,
What is
no.
the most important condition for calling income salary? Which income can be called salary? What is the most important condition for that?
Yes, sir. That's what I'm thinking.
Hmm. Think and let me know. We've discussed this several times.
We discussed that. Okay,
So there's a partner and there's a partnership firm. Several partners make up a partnership firm. What is the relationship between these two? A partner is an owner in the partnership firm. Is there a relationship of employee and employer between a partner and a firm?
no, sir.
No. And
Both are
remember, I
part.
told you that this is the most important criteria, that you must have a
Oh, yeah,
relationship.
yes, yes. I got it. I got it. I got it. Yeah, yeah, yeah. If the partners, the employee and employee cannot be partners. So,
Yes.
yeah, yeah, I got it. Now I got it.
Therefore, if the partner receives any kind of salary or bonus or commission or anything from the firm, it is not charged to tax under the head income from salary. It is treated as income from business or profession.
Yes,
Clear?
yes, sir.
Salary must be real and not fictitious. And last point, if an employee surrenders his salary to the central government under Section 2 of the Voluntary Surrender of Salaries Act 1961, the salary so surrendered shall not be taxable. Okay,
Okay.
let's move
What
on.
what
Yeah,
is this act? What is this act? Salaries Act 1961.
I have
Income tax.
not studied. I have not studied this act. If you want, I can find out about it and let you know. But there must be some law for government officials that if they want, they can surrender their salaries to the government. That means they are receiving salary from the government, they'll give it back to the government. Now, if government, it's only applicable for government employees. Okay.
Yeah.
So if the government is giving salary to the employee, and then employee says, I will surrender this, so I will give it back to the government, then government will not collect tax from itself, right?
Right.
Because the salary is coming back. So then in the hand, see, on first hand, government pays 100. The person says, listen, I'm surrendering my salary, you take back 100. Then the government cannot ask tax on this, right? It doesn't make any sense because he's already given the salary back to the government, he surrendered it. So then
Right.
where is the question of charging tax on that?
Yes, sir.
So that surrender shall not be taxable. The salary surrendered shall not be taxable. Clear?
Yeah.
Okay. What else? So we have already studied section 15, which tells you that when a salary is charged to tax, it is charged to tax when it is earned, even if it is not paid. It is also charged to tax if it is paid before it is earned, and it is also charged to tax if it is an arrear salary, if it was not charged in earlier previous years.
Yes.
Clear?
Yes.
Now,
Yes, sir.
section 17 specifically tells you a few other things that must be included in salary. So what are they? Wages also treated as salary. Any annuity or pension. Annuity means annual payments or regular payments. Okay, sometimes there are these schemes in companies that after you retire, every month or every year you will get a certain amount. That is called an annuity or a pension. Any
The pen.
gratuity.
The
Gratuity is
pen.
also like that. It's like a retirement benefit. So if you work for a company for 20 years, 30 years, after that, when you retire, you get a big lump sum amount of money. That is called gratuity.
The payment is a pension is a retirement fund, right?
Yes, through the retirement fund or some other scheme.
Through the retirement you get through the retirement you get salary also.
Yeah,
Yeah.
so that is also treated as salary income.
Yes, sir.
According to section 17, these things are also included in salary.
Yes.
Okay, any fees you get from the company, any commissions, any perquisites. What are perquisites? Perquisites are other benefits, like you use the company's car or company's home. These are called perquisites. That is why in short it's called perks.
Yeah.
You might have heard the term perks. Or profit in lieu of salary or profit in addition to salary. Sometimes what happens is that the business gives, in addition to salary or in place of salary, a share in profit.
Yes, sir.
Okay, that is also considered as salary. Any advance of salary, this we have already discussed. Any payment received by employee in respect of any period of leave not availed by him. What is this? Now, suppose an employee has 20 days of leave in a year. Every year, the employee can take 20 days leave. But suppose one particular employee this year only took 15 days of leave. So, to give an incentive, the company, what it does is to give an incentive for people who are working harder, who are taking less leaves. They say, okay, you were supposed to take 20 days of leave. You had the right to take 20 days of leave, but you took only 15. So 5 days you
Also,
work extra for the company, we are going to pay you for that. It is called leave encashment.
Sir, sir, can you explain, sir? Because your voice is sir, your
No
voice was
problem. No
your voice was
problem.
cracking, sir. Actually,
No
in between,
problem.
sir. Yeah.
I'll explain it again. So suppose a company has a policy that an employee can take 20 days of leave.
Yes, sir.
Okay. But one particular employee, he's extra hardworking. He took only 15 days of leave. That
Yes.
means he worked 5 days extra for the company. He could have taken leave for 20 days, but took only 15. He worked 5 days extra.
Yes.
So to give a benefit to him, the company says, we will pay you for these extra 5 days. Over and above your salary, you work 5 days. So over and above your salary, we'll pay you an extra amount for these 5 days.
For working 5 days extra.
Yes. And
Okay.
that payment is called leave encashment.
Yes,
Okay.
sir.
So that amount, any payment received by an employee in respect of any period of leave not availed. So if he did not avail the leave, if he worked on those days also, and for that, if he's getting any extra payment from the company, it is called leave encashment. Even that is included in salary according to Section 17 of Income Tax Act. Clear?
Yes, sir.
Okay. Next, annual accretion. That means accumulation to the balance to the credit of an employee participating in a recognized provident fund to the extent it is in excess of the prescribed limits. Aggregate of transferred balance to the account of an employee participating in a recognized provident fund to the extent taxable as prescribed under the rules. Any contribution made by central government or any other employee to the account of an employee covered under pension scheme referred to in section 80 CCT. These three are related to, again, retirement benefit and other similar things. We will discuss them in detail when we are discussing those points. So no point doing it now and then again later on. So just these 3 points, you park it on the side for now. We will discuss them a little later.
Next class, let's play. On next class.
Yes, whenever it comes up. Next class or the class after that, I don't know. Let's see.
Okay.
Okay. So we have covered section 15 and we've also covered section 17. In between, there is section 16 also. Let's cover that. It's not very long. Let's at least look at section 16 and maybe we can continue in the next class. So when you are getting a salary of, let's say, 10 lakhs, do you have to pay tax on the entire 10 lakhs? Now, the act also gives you, Income Tax Act also gives you certain benefits that, okay, 10 lakhs is your salary. I'll consider this as salary income. But before calculating the tax, I will give you some little bit of benefit. So you don't have to pay tax on the entire amount. You can take a few deductions. Deduction means you arrive at the income. Then from that, you reduce the deductions. And then this is the result. This is the amount on which you will have to pay tax.
Okay.
Okay. So what are those deductions? Under section 16, there
So
are three deductions that are allowed
what
from
have you
salary.
written, sir? What have you written, sir, after deduction?
This result.
Oh, result. Okay, result. I understand. Yes, sir, I got it. Yeah.
So you are allowed three deductions from your salary. First is standard deduction. Second is entertainment allowance. And last one is tax on employment. What is standard deduction? Standard deduction, why it is called standard? Because there are no conditions. It is the same for everybody. Whether you are earning a small salary or a big salary, whether you're a government employee, central government, state government, or a private company employee, doesn't matter. This standard deduction is available to everybody. That is why it's called standard deduction. And the amount is flat 50,000.
Yes, sir.
or the amount of salary, whichever is lower. What this means is, first you write your salary. Okay. Then you write standard deduction 50,000.
50,000 or less than that. Yeah.
Whichever is lower, that will be the amount of deduction. So if your salary is 5 lakhs, then how much will you charge to tax? You will charge how much? 5 lakhs. From that standard deduction, 50,000. Because out of these two, which is lower? This one is lower. So how
Yes.
much will be taxable? 4,50,000. But if your total salary for the year is, let's say it is 40,000 only, then if you do the same calculation, I will write 40K minus 50K. That will give you an absurd result of minus 10K. That doesn't make sense. So you will not do this. What you will do is 40,000 minus how much deduction? Whichever is lower. So which is lower? This one is lower. Minus 40,000, 0. So nothing will be taxable.
Yes.
This is the concept of standard deduction. 50,000 or the amount of salary, whichever is lower. Clear?
Yes, sir.
Okay. Next is entertainment allowance. In the case of standard deduction, you are only checking two things: salary or 50,000, whichever is lower. Over here, you have to check three things: 1/5 of the basic salary, 5,000 rupees, or the actual amount received. And also notice that this is only available for government employees. Okay.
Yes, sir.
So suppose the basic salary is 1 lakh. Okay. And the amount received is 2,500. Now tell me, how much will be the deduction for entertainment allowance? How much is 1/5 of the basic salary? 20,000. And this amount is 5,000. An amount of allowance actually received 2.5 thousand. Out of these three, whichever is the lowest, which is the lowest?
2,500.
So that will be the amount of deduction. Okay.
Yes, sir.
Suppose instead of 2,500, the person received 12,500.
Yes, sir.
12,500. Now tell me how much will be the deduction?
So 12,500.
No.
Actual
Lowest
amount,
of the three, no? So 20,000, 5,000, 12,500. Which is the lowest?
5,000.
So in that case, this will be the deduction amount.
But sir, actual amount of entertainment allowance received is 12,500. No, so you have to deduct from that actual amount.
No. Whatever your total salary will be, from that, you will reduce standard deduction and you will reduce 5K, 5,000.
Okay, sir.
You have received 12,500. That is fine. How much tax benefit you are getting is only 5,000.
Okay.
Is this clear?
Yes, sir.
Okay. And the last deduction is, the third deduction under section 16 is professional tax or tax on employment. When you are doing work for someone, the various state governments, they can charge tax on employment in the form of professional tax.
Okay.
And that is deducted from your salary. You don't really receive that money. Your company deducts it and pays it to the government. So obviously the government has already taken that much money. Now, if I have to pay tax also on that, that would be unfair. So that amount is allowed as deduction.
Yes, sir.
So you have your salary. From that, you have to deduct three things. One is standard deduction.
Tax on employment and entertainment allowance.
which can be 50,000 or actual, whichever is lower. Second, only if it is a government employee, then entertainment allowance also you can deduct. That is, you have to see three things: 1/5 of basic
One fifth,
salary.
1/5 of
Remember,
basic
basic
salary.
salary, not total salary. Huh?
Yes, sir.
1/5 of basic salary or 5,000 rupees or actual amount received.
Whichever is lower, we have to deduct that, right?
Least of the three, whichever is the lowest in the three.
Okay.
And the third thing is any tax on employment. For example, any professional tax. That you can, these three things you can deduct from your salary income, and the resulting amount only you have to pay tax on that. So these are called deductions. All right.
Yes, sir. Yeah.
So we have covered section 15, we have covered section 16 and section 17.